All right, class, let's jump right in. Today, we're going to demystify a form that's really important for so many community groups out there, the T1044 Nonprofit Organization Information Return. Now, I know it sounds a little dry, but trust me, understanding this is absolutely essential for any nonprofit that wants to stay on the right side of the Canada Revenue Agency. So let's get into it.
Just so everyone's aware, all the material we're covering today is prepared by me with a little help from AI, and it's all based on the most current guidance from the CRA.
So here's our game plan. First, we'll nail down the difference between a nonprofit and a charity, because they are not the same thing. Then we'll get to the big question, do you even need to file this thing? After that, we'll take a quick look at the form itself, and we'll wrap up with the really crucial stuff, deadlines, penalties, and how to stay compliant.
Okay, let's kick things off with Section 1. Before we even think about filling out a form, we have to be absolutely crystal clear on who we're talking about. So, what exactly is a nonprofit organization in the eyes of Canadian tax law?
Well, the official definition is pretty specific. And the most important part, the phrase you really need to burn into your memory, is any other purpose except profit. That's the heart of it all. So if you've got a local hockey league, a community garden, whatever, if it's set up for the good of the community and none of the money it makes can go into a member's pocket, you're probably looking at an NPO. Now, this brings us to what is probably the single biggest point of confusion out there. People use the words nonprofit and charity like they're the same thing. They are not when it comes to taxes. An NPO is basically tax exempt automatically, as long as it fits the definition we just saw. A charity, though, it has to formally apply to the CRA and get official registered charity status. And here's the biggest practical difference you need to know. Only a registered charity can give you a tax receipt for your donation. An NPO simply can't.
Okay, on to Section 2. This is really the core of what we're talking about today. Does your NPO actually need to file a T1044? Because, just being an NPO doesn't automatically mean you have to. I like to think of it like there are 3 gates. If your organization passes through any one of these gates, then yep, you've got to file.
So as we walk through these 3 gates, I want you to think about an organization you might know, maybe one you volunteer for or a club you're in. Does it check any of these boxes? This is the kind of thinking every single NPO treasurer has to do every year.
All right, gate number 1. This one is all about investment income. Did your organization earn more than $10,000 in the fiscal year from things like interest from a bank account, dividends, rental income, or royalties? Now pay attention, this isn't talking about membership fees or fundraising revenue. It's specifically that investment type income. If that number goes over 10 grand, you're through the gate. You have to file.
Gate number 2 is about assets, but here's the catch, and it trips a lot of people up. It's not about your assets in the current year. The rule is, did your organization's total assets top $200,000 at the end of the previous fiscal year? So you have to look in the rearview mirror for this one. It's based on the book value of your assets, basically what's on your balance sheet.
And then there's gate number 3. This one's the simplest, but it's also a game changer. It's the point of no return gate. If your organization has ever, for any reason, had to file a T1044 in a previous year, you have to file one every single year after that, forever. It doesn't matter if your income or assets drop way below the limits. Once you're in, you're in.
Let's look at a quick example to make this sink in. So in the previous year, this NPO had $350,000 in assets. That's obviously way over the $200,000 threshold for Gate 2. So now look at the current year. Their assets have dropped to $198,000. So they're under the limit now, right? Doesn't matter. Because they crossed the gate in the previous year, they must file for the current year. And what's the kicker? They've now passed through Gate 3, which means they're filing this form every year from now on.
Okay, so let's say you've gone through one of the gates and you have to file. What are we actually dealing with here? Let's take a quick tour of the form. We're not going to go line by line, don't worry. I just want to show you that it's a pretty logical document. It's manageable.
The form is broken down into a few main sections. Part 1 is just the basics, name, address, business number, you know the drill. Part 2 is about the money that came in. Part 3 is just a simple balance sheet, what you own and what you owe. The other parts cover things like how much people were paid, a description of your activities, and of course the signature at the end. At the end of the day, this whole form is really just about being transparent.
Now for Section 4. Everybody listen up, because this is the stuff that can get an organization into trouble if you're not careful. We're talking deadlines and penalties.
The deadline itself is pretty easy to remember. You have to get the T1044 filed no later than 6 months after your organization's fiscal year ends. So if your year end is December 31st, you have until June 30th of the next year. Simple as that.
And you really, really don't want to be late. The penalty is $25 for every single day the return isn't filed. There's a minimum charge of $100, and it can go all the way up to $2,500. That's a completely avoidable cost, so please mark that 6-month deadline in your calendar.
All right, we're in the home stretch. Section 5. Let's just wrap up with a couple of key things you need to do to make sure you stay compliant year after year.
Okay, a few final crucial points. First, keep your records, all of them, paper and electronic, for at least 6 years. Second, and this is a big one, if your NPO is incorporated, this T1044 does not replace your annual T2 corporate return. You have to file both. Third, a little pro tip, you don't actually need to attach your full financial statements when you file the T1044. And finally, of course, an authorized officer of the organization has to sign the form certifying that everything is true and complete. And that brings us to the end. I know we've gone through a lot of technical rules today, but I want to leave you with one last question to think about. This whole process, it's not just about ticking boxes to keep the CRA happy. Think bigger. How can this kind of open, transparent financial reporting actually help an organization? How can it build trust with its members and the community it's supposed to serve? That's a question that goes way beyond just the numbers on a form.